Hi everyone and welcome to our latest mortgage podcast. Today I have with me Nathan Goodridge, National Sales Manager at Foundation Home Loans. Thanks for joining me, Nathan.
Thanks, Anita, and thanks everyone for listening as well. Thanks for having me.
Great. To kick off, Nathan, some of our members listening may not be registered and or not have used you before. As a bit of an overview, who are Foundation Home Loans?
Yeah, so for those who have never used this before or maybe have not used this for a while, Foundation is a specialist lender. We're intermediary only, and we focus predominantly within buy-to-let, portfolio landlords. An increasing part of our business is actually residential, which for those who may have used this before don't actually know that we are in. So residential is a big focus for us. We're also seen as experts when it comes to specialist properties. So your HMOs, multi-unit blocks, and no surprise, short-term lets. So your Airbnbs and holiday lets as well. I think coming from a specialist sort of background, when we look at kind of the wider sort of backdrop as where our market is, as well as everything else. I think anytime that there's any uncertainty or any sort of trend within complex needs, it naturally means that more customers need specialist solutions. So if we look at the buy-to-let tax changes a few years ago, Brexit, the pandemic, cost of living and so on, all these different things naturally means that more customers tend to fall out of bed with the high street and then need to come more, I guess, to a specialist lender, I guess, to look a little bit outside of the box as well. But where we operate, we cover England, Scotland and Wales, and we've got a full BDM team covering all that as well. But we offer product transfers, we manually underwrite every single case, and have got a pretty sort of flexible approach to some of the trickier cases that you may have as well. So that is pretty much us, I'd say, in a nutshell.
Yeah, I think you've hit the nail right on the head there, Nathan. I think what we're looking at now is a specialist lender being more important to an advisor and client than what it has in the past. As you touched on, we've had the pandemic, we've had a lot of clients out there thinking they won't get a mortgage. So I think, the message from me is really, speak to people like yourselves with clients who don't think, or you don't think, could actually get a mortgage.
Definitely.
Cool. So I suppose my next question is, what's your USPs then?
So we're seeing so if I start with buy-to-let, we're seeing a massive trend, and what we have been seeing over the last few years since George Osborne's tax announcements in 2015, of people buying properties in a limited company, or in fact moving them from personal ownership into limited companies as well. I guess with us, I'll make no qualms. If you've got a customer who's a landlord with one or two properties, and they're basically a taxpayer, then yes, you're probably going to get a better deal somewhere on the high street with the top six. If you've got customers who are looking to maybe maintain or grow their portfolio in the most efficient way, then that is where us as specialist lenders, and specifically us as Foundation, can really come into it. So if I start with buy-to-let first, the main things with us is that there's no minimum income to use us on buy-to-let, no minimum time in employment, and we're quite flexible on the maximum age as well. So for limited company buy-to-lets, which makes up a large proportion of what we do, there isn't a maximum age as such on the application. So we would allow up to 4 directors on a limited company. We're also fine with unlimited shareholders, which is a USP in itself. So we get a lot of customers where, let's say, mum and dad go on as a director. They then want to put themselves on and as children on then as shareholders. So looking at sort of future-proofing or inheritance tax planning. And we're also fine as well with sort of complex structures. So we would be okay, for example, to allow intercompany loans. So if I had a plumbing business with me and my brother, I could send money from my trading business into my new SPV to then buy a buy-to-let property. I could then put that company or other companies on as shareholders then to receive income from that portfolio as well. But other stuff that we can look at as well is we're really flexible on sort of self-employed. We've got a pound for pound remortgage option, interest only. So pretty much really flexible across the board when it comes to both buy-to-let and residential.
Yeah, you covered a fair bit there on the buy-to-let side, and there could be a few of our members listening who aren't in this particular marketplace at the moment.
Okay.
Is this something if they rung up, if they rung up maybe their local BDM, is it something that you could actually give them some training on?
Yeah, definitely. So what I would say with that is that if you're not that big on buy to let at the minute, then that's absolutely fine, especially for limited companies as well. But what I would look at is, so IMLA predicts the market this year to be around 275 billion. That's down from around 313 to what they predicted last year. So that's roughly around a 10% drop. It's expected again to drop down next year as well. So we're in a slightly declining market from, when the stamp duty holiday was here and everyone wanted to buy a property. So what that means for both us as lenders as well as advisors is to look to future-proofing your business. So what types of customers or propositions were you not doing before that you should maybe look at now to, again, diversify your own income and diversify your own product split. So 51% of landlords in a recent survey that we done with the BDRC said that they would be purchasing their next buy-to-let property via a limited company. So what that means is an opportunity for those who are not in that space at the minute is to, like you said, pick up the phone to your BDMs and look at getting some training as to how you can set these up and what the different niches are to make sure, I guess, that if you've got a customer sat in front of you, you can give the most holistic and wider advice possible that both serves the customer as well as helps yourself as well.
Great, thanks for that, Nathan. We're seeing a shift in customers purchasing properties through special purchase vehicles. Firstly, can you explain SPVs?
Yeah, so kind of just tailing on then from the limited company bit. So an SPV is a setup, I guess, that is purely used for one purpose, and that is for letting properties out, and that's what we would accept. We would ask that they come with certain SIC codes. So when you set up a limited company on Companies House, it's worth doing on a Friday night. It costs about £14 to do. You then set your company up and you then register SIC codes, which are usually property related or letting property out for those SIC codes. You then obviously pick your fancy name on there. And that then means that when you come to foundation on the application form, you would then put that company down as the applicant and you then as the director. And then obviously whoever the shareholders, as I've just mentioned, wouldn't then need to go on the application. But yeah, this is pretty much, just think of it as a tax wrapper around the directors who are coming on. So from the changes, that's Section 24 tax changes, which were phased in over 4 years, what it now means is that any customers who are now receiving rent in person, and it's in personal ownership, that income or that rent is subject to the standard rates of tax as exactly as it would be for income. So the main difference from what we're seeing now versus what it was prior to the changes is that you could offset some of that income against your mortgage costs and other finance costs as well. What it has had a knock-on effect is let's say your earned income is near enough on going into the next tax bracket, that rent that you'll now be receiving from your rental properties could then be taking you into that next bracket and then subsequently paying that 40% on there as well. The other option that there are there for landlords, and I would urge all landlords and brokers as well to be pointing landlords in the direction of a tax advisor to make sure on what is actually best for them, is that any rent that comes in via a limited company or an SPV as such, is only then subject to the 19% corporation tax or whatever the corporation tax is for that year as well. So there is a benefit to some customers that it is well suited for, and that's again where we're seeing that trend of landlords purchasing properties in an SPV and in a way running their portfolios more like a business than potentially they would have been doing before.
Thanks, Nathan. So leading on from this, are there any niches with Foundation that can support this growing trend?
Yes, so like I said, the structures that we'll allow on the limited company stuff really comes into its own. So some lenders may want that on when you're putting an SPV application in, that the directors and the shareholders need to match identically, whereas we're quite flexible. So like you only need up to 4 directors can go on, and that will take personal guarantees against those. you can then have unlimited shareholders. So you could have maybe 10 shareholders on there and none of them were on as directors. You could have someone perhaps that was a 90% shareholder that wasn't a director either. And we're fine with the multiple layerings of companies on as shareholding as well. So if you've got a landlord who's maybe got 10 properties in an SPV or limited company, they've then got a trading business as well. They might have like a group structure within that as well. So a sort of holding company. We're fine with all those sort of complex and niche scenarios. So what I would say is that if you've got anything like that, pick up the phone to us and we'll try and sort of point you in the direction of how best to sort of place it with us. And if we can't help, we'll know a lender that can as well.
That's brilliant. Thanks, Nathan. Moving on, the cost of living crisis. It's a topical issue at the moment and one that everyone will have felt lately. How are Foundation positioned to support customers when it comes to affordability?
Yeah, and yeah, I definitely agree. I was in the car this morning for about 2 hours, and I don't think 10 minutes went past without someone mentioning it. And rightly so. I think it's good that there's a national focus and sort of discussion on this at the minute. But I guess how it falls down to us. So obviously a few weeks ago, I think it was last week, I think the Bank of England stated that they were looking at pulling the sort of the changes that came with MMR, so stressing on the 2-year fixed of the 3% plus the BBR. So for us, there hasn't been any change in us actually removing that from our affordability as such. We'll continue to remain prudent and obviously give common sense lending decisions. So I guess how we are positioned to help this kind of topical issue at the minute is that we have got some flexibility when it comes to underwriting, especially when it comes to self-employed. So if you've got someone who is recently self-employed, so maybe they've got 1 year's accounts, we can look at using that latest year's worth of income. If you've got someone who's maybe got, they had low years in COVID years and is now firing at all cylinders, we could look at using latest year's worth of income, even if there has been a significant jump up as well. What I would say is that anything with self-employed, if either using 1 year's or latest year's, and I guess pretty much across everything with residential, is that the bank statements are fundamental in how we reach our lending decision. So, for example, if you had a customer who earned 50k in 2020, they then earned 50k in 21, but then have earned 100k in the most recent year, we can look at taking a view on the 100k, but we'd want to see that that income is sustainable moving forward. And the bank statements are really kind of the best way to kind of gauge that. So does these bank statements you have in front of you look like someone who's earning 100k a year? If it is, then we can put the case forward as well. So that's one bit that we can help with on the self-employed piece. We do also have a pound for pound remortgage option. And this just means that we've been able to sort of take guidance from the FCA and look at having a modified calculator for those who are not taking any additional borrowing and are up to date on their mortgage payments. So how this would look is if you go onto our website, if you're not already registered, obviously get yourself registered. But on the calculator, there's an option to say that there's no capital raising. What we'll allow to do then is for you to stretch the typical 4.5 income stretcher to get the loan that you need. So for example, I had a case yesterday where they had, I think there was about 150k worth of income needing a loan of just over £1 million. They were obviously falling out of bed with high street calculators. With us, we were able to look at, I think it was about 9 times income in this scenario to get that loan across. What we look at and what the calculator builds in is the monthly expenditure. So as long as it deems it affordable, and like I said, there's no capital raising and no missed payments, we can look at doing an income stretch on that to bring that over like for like. We can also as well, we've also got a really flexible stance around interest only. So there's no minimum income to use this on interest only. No minimum property value as such, just minimum property, sorry, 75. But as long as it fits within the product guide and there's no minimum income, we will allow interest only. There needs to be a minimum of at least 150k worth of equity for us to use sale of mortgage property, but we can look at doing part and part using it, topping up on repayment as well. So really flexible on there, and we stress the payment on an interest-only basis as well. So it does often work out a little bit more affordable to get the loan you need. But other bits is that we can look at doing 40-year terms, as well as taking earned income up to the age of 75 if sustainable and makes sense as well.
So I suppose to summarise it here, Nathan, one, you've got the manual underwriters. So if one of our advisors has a case that basically maybe there's a bit of adverse credit, he's been self-employed, his salary has gone up and down over the last few years, is pick the phone up to you and chat it through.
Definitely, yeah. So if you're on our website, there's a BDM Finder link on there. So just touch base with them if you haven't done already. But yeah, if you've got something like that where there's maybe 3 or 4 hurdles, which it's always the same, isn't it? One lender will do this, but not the other. This lender will two out of 4 of them. Is just send it over to us and let's paint the picture as to what we're looking at doing and what the issues are. If we can get it to work, we will have a look at it. We've got a real big appetite to lend on residential and across the board, to be fair, at the moment. So we can pick up the phone to our underwriters as well as our credit risk team and really kind of chew through the case to find a solution that works for both you and the customer as well.
Right. Another topic, which is, I think, close to advisors' hearts at the moment, is SLAs.
Okay, yeah.
How are you guys fixed with that? Are you up to date with your SLAs?
Yeah, so at the moment we're currently working on 1 day for initial underwrite on a residential case and 2 days for initial underwrite on a buy-to-let. So obviously, there's no secret. There's a lot of movement on the sourcing systems at the moment, with some lenders obviously protecting SLAs as well as margin, which obviously 100% we are one of those lenders as well. But yes, service with us at the moment is up to speed. I'd encourage everyone just to kind of look at the documents that we're asking for and submit those up on day one and all together. It just means that if we can get it signed off within that 1 or 2 days, we'll obviously get the valuation done, and it'll just help us get to offer a lot quicker then as well.
Right. I think it's just a nightmare out there at the moment, isn't it? With products being pulled, rates being pulled. And I can't see it really settling down at the moment. Wish we had that crystal ball, don't you?
There's it's a difficult one to kind of put your finger on at the minute, isn't it?
If a member wants information on Foundation Home Loans, what's the best way to make contact with you?
Yep. So if you go on to the website, we've got our support team number up in bold, but I would definitely say registration is key. So if you're not already registered, get yourself registered. It'll take about a day for you to get your logins. We'll keep you up to date with anything that we're changing, anything like product rates and so on. And you'll also have your BDM contact on there as well. But if you're doing it, like I said, your BDM should be your first point of contact for any cases or anything sort of quirky that you just want to chat through as well.
Great. That's it from me. I hope you found this podcast interesting. Thanks for listening and look out for my next podcast.